Hi everyone, welcome to my channel, The Stock Analyst. In this video, I will talk about Disney stock because of the recent price movement and also the recent earning coming up next week. And the stock is about to break out. It has an earning, we will have a run up, and we will talk about some option opportunities so that we can get some huge profit. So stay tuned, do not jump to the end of the video because I think this video will give you some good insight if you want to get some quick profit. And also, before I start showing you the charts and everything, I wanted to talk that this video, not the video, like this stock is very special to me because I never had a plan to make a YouTube channel. So when my wife started her own YouTube channel, which is about your food, cooking, travel, health, and everything. It's an overall lifestyle type of channel. So I wanted to see how I can screen capture, I can make a video, and just from curiosity, I make that video on Disney stock and I uploaded it. And it was very funny that after uploading the video, I got some subscriber, and then I made another video, and I think within 3 videos I got 40 to 50 subscribers, and that inspired me a lot. Then I decided, okay, let me make some videos, and then this journey started. I think it's now 1 month and we are close to 650 subscribers, but this stock was my first video, so this is very special to me. So anyway, let's go back to the chart, and if you like all of my videos, please do not forget to hit the like button. And also do not forget to subscribe to my channel. It helps me a lot to grow my channel faster. So I'm showing you the Disney stock chart at the daily level, and you can see that there is a big jump from 150 to 170 to 180. Then it went up to 184. It came down, and again for last few days, huge run up. And the good thing is I missed that. Sorry. I just want to show you what I missed. Have a look. A falling wedge, then a breakout, and it ran from like 170 to 180. And around this period, I was so busy with other stocks like short squeeze stocks, you know, and I made a huge profit. I don't regret like why I did not look at Disney stock, but you see how it's moving. Also, note that the earning for Disney is coming on 11th of February, which is next week. So we are expecting some run up. I'm showing you Netflix. The recent earning for Netflix, it ran from 500 to 590, huge run up, right? So if there is a good earning coming, then this stock can definitely go to 210, 220 or more. But anyway, before the earning, I think this stock will go higher, and the chart is also telling there is a bull trend upward and it is about to break out. So why not make a video? The earning is coming, the chart is telling us a good story. So let's see the support, resistance, and some option opportunity. Also mind that even though I showed you the Netflix, the same time the previous earning, you see Netflix came from 500 to like 480. So you never know what will happen with earning. So it is always some kind of gambling, but at least before the earning, the pre-anticipatory run, you can always run the hype, and then you can take your profit. You can leave some of your shares or option, but always like take some profit before the earning if you are not sure which way it will go. So looking at the chart again, let's look at some support and resistance. First of all, I think this is the max 183.52, and as far I can remember, after hours this stock is high. I think it went up to 184. It's not showing here, but I think it went up to 184, which is like above that previous high, but it was after hour. So Monday morning, look at the pre-market price, maybe it is 184 or more, but if it opens over 184, it might go higher. Sometimes the shorts appear, they try to bring it down, but I think this will go high. Also look at this particular line here, from where the I think that's a good one, right? Yeah, this is one line. You see 1 2 3 4 5 6 7, around 176. This is a good support, and the other one I think also like around this one. So the last day the candle started from here around 180, then you see another week here, 1 2 many weeks, right? So 183 and below, if it comes to 180, this is one support, or if it comes back to 176, definitely another support. But I think the stock will never come to 160 68, at least before the earning. But if the earning is bad, the stock can come back. But we are making the video for before the earning, right? So once we break out, we can go even higher. And why I'm saying that, let's look at Nasdaq. It says a strong buy, and you can see all the big names here. I'm not going to read all of this, but you can see all the names, and the average price target is actually $190 with a high of 210. 190 and 210. We are not even 190 and 210. So if there is a good earning, it can go 210 to 220. If not, at least before the earning, I think we can go to 190 to 200. So keep this support and resistance in your mind if you are playing with shares, definitely. Now let's look at option opportunity, because I love to play this with option. Personally, I also have a previous option I bought, but I might re-enter again at the breakout. So the earning is on 11th of February. If you want, just buy like 12th of February, just the very next day. You can run up to the earning, you can sell before the earning, or if you buy 2 or more options, you can sell some of this for profit, and you can hold 1 or 2 just to see if the earning is good. Looking at the Netflix earning, maybe you can anticipate there will be a good earning, but I'm not going there. Earning is a big gambling. If you want, you can even go with longer, like March 19th, but you can see the premiums are higher. Even for 200 strike, this is $330. So again, it's up to you which one you will go, but for this video, I'm just gonna choose February 12th so that I can show you what are the options we can play with. So if you think it will go up to 190, this is very cheap, $213, not even 200. I'm just saying up to 190, and it is very possible because we are 184 and we have few days, it can go up to $190. Even though if it does not go to 190, I think if you buy, then the premium will go high. Or you can choose 185, and with your break even will be 188. So entirely up to you how much you can afford. But again, like if it breaks 184, it will go higher. Whatever premium you will choose, it will be higher. Entirely up to you. The other option I want to talk is, most probably you know about debit spread. So you buy one call and you also sell one call. The thing is, like, you do not have to spend a lot of money for buying that call option. At the same time, the downside is your maximum profit potential is maximum. Let's say you buy, look at delta always for debit spread. So if you choose 185 and 190, right? So 185 is 40 delta, or let's look at 180 delta. So it has a 55 delta. It means if the stock price goes $1, your premium will go $55 higher. And if you look at 190 with $1, it will go $27. So if you buy 180 at 565, and if you sell 190 strike price, so basically you buy for 565, you sell at 213, so basically you pay like $350. But the good thing is, if the stock price goes higher, for every dollar, this one will go $55 and this one will go $27. So end of the day, if the strike price, the stock price, share price goes up, you will make more money. You can wait till the expiration, and if the difference is 180 and 190, so basically if the stock price is more than 190 at your expiration date, so basically this difference is $10, which is $1,000 minus the amount you paid, $300, so you will gain $700. I'm not spending a lot of time on how debit spread work. If you want, you can see some other YouTube videos, or you can make your comments. I can make another video how to play with debit spread, but you get the idea, right? If you do not want to spend even $300, what about you choose these two, 355 and 213, so that $130. So you just spend $130, and if your strike if the share price goes above 190, so basically you will get how much? 190 minus 185 is $500. So $500, and you spend 100 $40. So you will get $340 in the event if it goes over 190. You can always choose a debit spread between 180 or 185. Look at the delta always and look at how much you are paying and you think the stock will cross that particular line. If you buy the 180 strike price, you pay 565 and you sell 185 strike and you collect 355. Basically you are paying only $200. And if the strike price is above 185, so basically you will get 500 minus 200, your gain will be $300. Easy money if you believe it will go over 185. So the other good thing about debit spread is even though your profit potential is fixed, you can go more than $300, but you are spending only $200, and the worst case, like, you will just lose 200 or you will lose some of it. Anyway, this video is not about how to play with debit spread. The main thing was to show you the chart pattern that it is about to break out. It will go higher whether you buy call option, you buy share, or you buy debit spread, or put, selling put, so many different things. The main thing is I see a potential for this stock to go higher. And if you agree with me, if you like this analysis, please do not forget to hit the like button. Please do not forget to subscribe to my channel, and also visit my other videos I made before in the description box. I also have the Twitter link, also interactive broker link if you want to make another account with them, especially if you live in Canada. Anyway, my friends, take care, and I might make another video tonight, so stay tuned and take care, my friends. Peace.